Well, thank you so much, Amit, for being here with us 1 year more in Fi21 this year. Last year, you were also in our annual event, annual forum for FI. And it's really my pleasure to having this opportunity to be with you again and having this fireside chat. Thank you.
Oh, thank you so much for having me. I'm really looking forward to the conversation and to engaging with the global community that you bring together through the event.
Thanks, Amit. Well, this year we are with this session, this fireside chat, opening the track for institutional investors. And you at GEAN have been working with this profile of investors for some time now. And through your different GEAN reports, which are really a reference in the sector, and also with your institutional investors initiative, I know that you have a lot of experience learning from them and working with them. So I wanted, first of all, to ask you, what's your view on the maturity of the state of the impact investing and ESG investing in the sector? And also, what are the key findings that you have from these reports and these working groups with institutional investors?
Sure. Absolutely. Thank you so much. I think this is such an exciting time to speak about this topic. We see interest among institutional investors around the world growing dramatically as we speak. And I should be specific, when I refer to institutional investors, I'm speaking about pension funds, insurance companies, endowments, and in some cases, sovereign wealth funds as well, who all, of course, control vast amounts of capital, but also an important characteristic is that they need to produce returns over the long term. They're often thinking about obligations to pensioners 30, 40, 50 years down the road. And so long-term financial performance is absolutely critical to their models. That also means that we need to think about the long-term sustainability of society and of the planet, which often is leading them to think about how does impact fit into their investment strategies, and how can they make sure that they're allocating capital in a way that helps drive positive outcomes. This is a rapidly evolving kind of landscape, and I think one of the things we've seen in the past couple of years is a lot of growing interest among institutional investors. Many of them have been thinking for some time about how they can think about environmental, social, and governance factors, or ESG, from a standpoint of risk. How do they make sure that they reduce risk that can come from ESG factors for their financial performance? What's happening now, though, is also an expansion of thinking into how do you use your investments to drive positive outcomes? How can you use your investments to drive contributions to the Sustainable Development Goals? How can you use your capital to help contribute to mitigating climate change and having a more sustainable planet, society, and market? And that is leading them to increasingly allocate capital to impact investments. And many are setting portfolio-wide targets and objectives that factor in impact, whether that is things like how they can commit to net zero and think about a portfolio-wide strategy of addressing climate change, or in some cases, they're thinking about how they can make portfolio-wide commitments to social targets and how can they use their capital to better drive outcomes for society. So it's an incredibly dynamic time, a tremendous amount of opportunity, and I'm really excited to see so much growing interest around the world.
You were mentioning climate and social issues. What are the specific asset classes, maybe, and impact themes that you see that institutional investors are entering right now?
Well, I think historically, when they're thinking about positive impact, we saw investors largely thinking about private markets. Private equity, in some cases private debt. What we now see is increasingly the exploration and the focus on positive impact across the portfolio. And so there's a convergence. We see a lot of allocations in areas like private equity, debt, real assets, even cash management strategies, but even for listed companies. Increasingly, investors are thinking about how can we engage with these companies that typically are their largest holdings to drive positive outcomes. And so this type of impact investing and impact thinking is now being applied across asset classes. And I would also say from a thematic standpoint, we see a lot of interest, of course, in climate change, and not just in how to decarbonize your portfolio, but how to move capital into climate solutions, whether it's renewable energy, technology-based solutions, or nature-based solutions. But institutional investors are also thinking about how they can use their capital to advance social goals, to provide kind of higher quality employment opportunities that help reduce inequalities, how they can advance gender equity and racial equity through their capital. So those are some big, broad issues, and of course, there's lots of opportunities across sectors within them.
And also, well, I wanted to ask you, maybe in what they are not entering, because I was thinking that I am in contact with different impact funds who are doing fundraising, and it's really hard for them to have institutional investors investing in these funds, because typically institutional investors invest high amounts of capital, as you were saying. They normally want to have maybe a small percentage, and this brings you to very big funds, right? And also we have this component sometimes in, for example, in venture debt, which is maybe more risky, but at the same time, the problems that we face require innovation, right? So how do you see institutional investors entering into investing, even if it's small amount of capital in venture capital? Do you see it at all, or is something that because of risk, size, or whatever, is the institutional investors is not the right profile for venture capital?
Well, I think what you're touching upon is a critical issue for impact investing. We need those investors who are focused on innovation, new business models, new investment structures in some cases, that help push the frontier of how capital is being used to address social and environmental problems and fill or kind of address market failures. We also need the scale. In addition to the innovation, how do we bring those solutions to much greater scale, and how do we actually make sure that new approaches that have traction can be rolled out globally, so they actually move the needle on big systemic issues like those captured in the Sustainable Development Goals. One of the challenges, as we discuss it with the institutional investors that we work with in our working groups, is that the themes often that you mentioned are often summarized with the 3 S's. That institutional investors want safety, simplicity, and it's really critical that they want to, from a safety standpoint, really understand that there's track record, and that they can understand the investment opportunities, they can see the returns, and it feels like a safe or appropriately risked opportunity for them. Simplicity is, of course, speaking to the structures. Structures they know, models they know, and things that they can process fairly quickly, because they need to move a lot of capital, in many cases with relatively small investment teams. And the 3rd S is size, which you spoke about. And of course, they need to move big amounts of capital, so they can't write very small checks to very bespoke or customized solutions. We do see some institutional investors starting to adapt those kind of criteria ways to explore new opportunities, but it is a challenge. And it means that many great impact investment opportunities are not going to find a lot of capital from institutional investors if they're new. But as they get more maturity, more time, more track record, and more scale, then it opens up a broader set of investors. So thinking about which investors play which role is absolutely critical.
Yeah, okay, definitely. And what do you see, well, in the near future, the potential opportunities for institutional investors to invest, both in terms of the potential impact that they can achieve with their investment, as well as with the interesting enough investment results for them?
Yeah, I think it's important for institutional investors to really kind of reflect on if they have a long-term focus on generating returns, it is absolutely critical that they invest in a future society that works for all people, that works for the planet, and those 2 things are essential if they're going to work for financial returns and for the market. And as investors can align that future orientation with the way they allocate capital today, it will lead them to be thinking about positive and negative impact. Of course, how do they reduce their negative impact on the world, and how do they drive up their positive impact? But ultimately, that means that institutional investors should be thinking about this at a strategy level. at a portfolio-wide level. What are they trying to accomplish as an institution? We see many large pension funds who are now committing to the Sustainable Development Goals, committing to net zero targets, and that type of high-level strategy then moves throughout their entire portfolio and throughout their organization in terms of the decisions that they're making. We believe that's absolutely critical that all investors, including institutional investors, are thinking about impact performance as they're making investment decisions. So what is not only the financial performance of this investment, but what will the impact performance be? And that is across asset classes and certainly across sectors, whether it's financial inclusion, sustainable agriculture, affordable housing, green real estate and beyond, that it's important to think about the metrics that will drive superior performance. And we at the GIN are doing a lot of work, of course, in our system, IS with a plus sign, that has over 20,000 users that gives all investors, including institutions, the core metric sets that will help them understand their performance. And then we're doing work as well on helping to develop methodologies around how we can compare and benchmark impact performance. And I think that will help a lot of investors, better understand their impact and inform the goals that they're setting for their portfolios.
And I have heard you said before that good intentions are not enough, and investors need to be more deliberate and need to know which investments are more impactful and to compare their methodologies with others. So can you please elaborate a little more on this?
Yeah, well, it's absolutely possible to have impact by coincidence or by accident. You make an investment and then lo and behold, some great things happen as a result. Now, those may be good for the world, but we want to aim for a higher a bar and a greater degree of sophistication. We want, of course, we think intentions matter. If you set a goal or an objective for investment, whether it's to generate financial returns or have a positive impact, or in our case, we want to see both, that certainly is important. But then when you think about financial performance, we don't just set an intention. There's all kinds of activities that we do to help make sure that we maximize our chances of achieving those financial objectives. Whether it's in the due diligence process, in the investment management process, or even thinking about how you exit an investment. The same thing applies for when you think about impact performance. Intentions matter. Measurement matters, but we also need to incorporate impact and integrate it into the entire investment process. How you set goals, how you think about investment management, how you understand performance, and ultimately how you think about when time comes to exit an investment, how that factors into that choice. That is what we're actually seeing a lot of institutional investors move in this direction. And I think one of the ways that the GIN can be a resource is to help them figure out all the thorny and difficult questions that come up. But we believe that will lead to greater long-term financial returns, and also a whole set of benefits that are important to certainly to pensioners, the clients of pension funds, to a variety of stakeholders, whether it's employees, people in the community, governments, and society at large.
You were saying that impact measurement matters, and I wanted to ask you, which frameworks do the institutional investors that belong to your network and that you work with usually are using?
Yeah, well, there's a lot of work being done to think about these issues around measurement and also around how we think about actually like reporting. And there's a lot of great work being done. We work in this area as the GIN, and we work with over 50 different partners around the world. Some of the things that we see getting a lot of adoption, there's when it comes to climate, there's a lot of kind of activity around TCFD, and so how you can actually work around climate disclosures, and that's getting much broader adoption. There's also work being developed, the counterpart for that around inequality, and I think that's really important because that we think about impact across many dimensions. Now, a lot of those things are focused around disclosures and around risk management, which is important, but that's just one part of it. We also think it's not just about risk management or defense, but also about how do you drive positive outcomes? How do you make contributions to society and to the planet? And that's where positive impact comes in. Iris Plus, which works with, as I mentioned, over 50 different standard setters, that incorporates a lot of the great work being done in one system that investors can use to start with an SDG or a specific goal. So I'm trying to help drive clean energy access, or affordable clean energy is the way that the SDGs frame it, or I'm trying to advance gender equity, and how you can translate those strategies into tangible measurements, metrics that are standardized. And that, as I mentioned earlier, is getting a lot of adoption, and it's free to use. It has over 20,000 users and growing by the day. But that's an incredibly useful resource that helps tap into a lot of the great thinking that's being done by our partners and stakeholders all over the world.
Mm-hmm. Well, we will be talking about impact measurement and management later on this afternoon with Alicia Ruby. So yeah, I think it's a huge topic. And I wanted also to ask you, that we are trying to bring newcomers into this sector because we really think that more capital is needed, and we need to bring more people knowing about these opportunities, right? And I would like to ask you, what would you say to these investors that maybe have this appetite for aligning their capital with their values, but they are starting doing so? Which recommendations, or what would you say to them?
Yeah, absolutely. Well, I think it's an incredibly important thing that they're doing, or that you're doing, I should say, if I'm speaking to them, that it is, there is now so much opportunity to put your capital into things that help invest in a better world. And you can do so while meeting your financial objectives. And I might actually return to some of those 3 S's I mentioned, around what institutional investors are often thinking about: size, safety, and simplicity. We now, there's a lot of great innovative work that's incredibly creative and very nascent in the impact investing community. And many newcomers actually like those new entrepreneurial models. They like the complexity and they like the innovation. But there are many who actually want to follow those 3 S's. In that case, when it comes to size, the market is now, based on the estimates last year, approximately $715 billion in US dollars in assets under management around the world, and it's growing tremendously. So it is now of the scale that is appropriate for many investors to make allocations, and you see many credible institutions, whether they're institutional investors, asset management firms, private equity funds, philanthropic foundations, who are now active in the market. And that gets to the point around safety. We now have a lot of track record for impact investing, and we have a lot of incredibly credible investors who are very active in the market. So it's not that risky to get involved because there are, there's a lot of activity and a long, multi-decade track record that helps demonstrate that this is viable and appropriate for many investors. And last but not least, the simplicity point. There are now many resources, many asset managers who can help you, many private wealth managers who can help you find great impact investment opportunities. And there's a lot of great talent in the market. Really incredible people who are very good at allocating capital for high impact. So this is, the market is bigger, coming to size. It is safer, given that the track record, and it is simpler and easier to navigate than ever before. So I hope that all newcomers take advantage of this opportunity, because it is an incredibly important moment in the world for us to put all the capital that we have to investing to address these big issues like climate change and inequality.
Definitely. Yeah, we need them, right? The world needs them.
Yes.
Yeah. And finally, I know that you are working on a piece of work about reimagining capitalism. So how can we make capitalism work for all? And what will the world be like if we have this new way of capitalism? Because I know this is something that many people have been talking about from the past decade or so. How are you hoping that your work will make a difference?
Yeah, well, I remember, there have been people calling for changes in capitalism, since I was born, but when I was younger, it was mainly activists who were thinking about this, whether they're environmental activists or social justice advocates. What's changed now is that we now see many leaders of industry corporate CEOs, major investors, wealthy kind of technology entrepreneurs and others who all are recognizing this need that we actually need to shift our system. It's very clear that right now our system is not working. It's not working for people, it's not working for the planet, and it's not actually working for most investors. And so what is incredibly important for us to do now is to build these issues of impact and sustainability into the operating system of our markets. And our vision at the GIN is that impact becomes part of all investing. That all investors are thinking about their positive and negative impact alongside their financial considerations, just as the new way of doing business, the new normal, if you will. But what I think that will mean in terms of what the world will look like is that we will see a market that is in harmony with with society, and a healthy and vibrant society that creates opportunity for all people, but also in harmony with nature. That we are helping to sustain the planet, not just from a climate perspective, but also when we think about nature and biodiversity. That these things can actually coexist in harmony to the point where the investment markets are actually and the private sector is actually regenerative. So I'm flipping the model of where we kind of extract resources from the natural world, and we extract resources from kind of from people and from communities, to one where we actually we create value through investment, not just for shareholders and investors, but also for all stakeholders. For customers, for communities, for employees, but also for the planet and other species. And I think that is ultimately what we're working towards. And I hope that every participant in this conference sees their role as part of this solution, because this is a systemic shift that requires leadership from across the system. So every single person who's present here today has a role to play in building a better world and investing in a better world and creating that next normal.
Mm-hmm. Well, I definitely share with you that vision of a better world through this new way of capitalism. And I'm sure that people who are following FI are the same. So, well, thank you so much, Amit. Hopefully I will be able to see you again
Yes.
in FI22 or in your annual forum next year. And thank you so much for the great work that you do at GIN. I think it's really valuable to the whole community around the world, all the information that you provide, resources, the working groups that you are creating, I think really, really makes a difference and really helps the sector to move forward. So thank you so much, and hopefully see you soon.
Well, thank you for your kind words. I really do appreciate it. It means a lot to me and to all the people on my team who work on at the GIN. And I do want to say just thank you so much for this opportunity. I think forums like this are so important to bringing together this global network and community at a time where we're all kind of separated. And I look forward to continuing the conversation. Thank you so much.
Thank you, Amit. Thank you. Bye.